Back to our main story here on Wall Street. The Fed's decision on Wednesday to keep interest rates unchanged. The central bank hasn't cut rates since December of 2024. And joining me now in studio is our in-house resident expert, Michael Reinking. He's a senior market strategist for the stock exchange. Michael, always a pleasure.
Hi, morning. Thanks for having me back.
Yeah, it's great to have you. So what were your takeaways from the Fed decision and Powell's remarks on Wednesday?
Yeah, so I mean, look, I think it was largely as expected, right? Where the Federal Reserve left rates unchanged. It would have been shocking if they had done anything otherwise. And you continued to hear Fed Chair Powell kind of read from kind of some of the same script. Now, we did get an update to the summary of economic projections for the first time since March. So if you think back to March, that was before Liberation Day, right? So you have to just kind of keep that in your mindset. So we saw some negative revisions to GDP, upward revisions to inflation targets, slightly higher for unemployment. And then there was a question on the dots. So the dots is a reading of where FOMC members believe rates will be. There are 19 members on the committee. There was some question as to whether the dots would show 1 or 2 rate cuts through the end of 2025. At the previous meeting, there was 2, and they remain there. So that was positive from a market perspective. However, the distribution within those dots shifted. So there are now 7 members of the 19 who think there will be no rate cuts by the end of this year, while there's, I think, 10 that are sitting at 2. Right, so you can see there's this divide that's happening kind of within the committee. They also removed some projections for rate cuts in through 2027. So they went from 3 down to 2 over those 2 next years. I think what Chair Powell has tried to, in the past, downplay the importance of the dots, right? And he continued to do that this time around. And what you're starting to see is while you have this divide, much of that is just the uncertainty, right, in terms of where the economy and what the impact of tariffs were going to be kind of as we look forward. So that's why you're seeing a little bit of a push and pull there.
How do tariffs factor into this?
Yeah, I mean it's right now the primary driver. So Fed Chair Powell suggested, right, when he spoke during his press conference, that had it not been for the prospect of kind of higher tariffs, that we could be cutting at this point, right? So it was a nod to the idea that we've seen inflation data improving recently, but we still have this large unknown, right? Now there was a small shift within the language in the statement, which suggested that there was less uncertainty, and that's because some of the prospect of the very, very high tariff rates that we'd seen kind of come out of the Rose Garden have diminished here. And that's really the key, right? So, we have trade negotiations are supposed to be done by July 9th, right? And what you're seeing here is that we haven't yet seen the impact of tariffs. I think, the idea that we would see that show up in the inflation data yet was probably a little misguided, right? Because companies are able to work through some of their inventories that they'd built up. So you're not necessarily going to see that. Now, the second piece to this is, and this is also something Chair Powell talked about, is that the idea that if we have tariffs that are somewhere close to where market expectations are, so say in the low teens, kind of close to that 10% baseline tariff, right? And you split that up between suppliers, consumers, importers, exporters, and everybody eats a little piece of that pie. It's not necessarily all that inflationary, right? And then we can start to move. If those negotiations don't go so good by July 9th, and all of a sudden we see a turn, this is not market expectations right now. This is kind of an outside risk, right? If you see those kind of the administration once again really try to amp up pressure because we haven't gotten deals done, right? Then that's where the outsized risk is, and that's what Chair Powell is saying. We have to wait, right? So it's kind of this, there's been a lot of back and forth between President Trump, expressing his displeasure with Chair Powell. Chair Powell's in some ways saying, if once we know that tariffs are going to be kind of around that 10 or 13% baseline level, we can then move forward and cut rates.
I do want to get your expertise on how the Middle East now might change this picture or impact trade negotiations. We're waiting for this decision, of course, from the president on his particular path forward.
Yes. So there are 2 different things. So the impact on inflation, right? We had Chair Powell mention a little bit. Look, it all comes down to where oil prices go. Right now, we've moved up, kind of call it 5 to 10%, kind of since the start of, kind of the conflict, escalated. That is, something that typically kind of will reverse over kind of a period of time outside of the 1970s, right? And markets have been, kind of pretty calm about what's going on, all things considered. And we could talk a little bit more about the oil dynamics. From a trade perspective, this past weekend was the G7. That was when a lot of these negotiations were at a very high level were supposed to take place for trade. President Trump left the G7 to come back for the Middle East. So that does, right, he left Treasury Secretary Bessent there to handle those negotiations. But, right, we didn't see those, kind of the meetings with the Prime Minister from Japan that was supposed to happen, right? So that potentially could drag out some of those trade negotiations.
And quickly, Michael, before I have to let you go, we are anticipating probably a heavy volume today, right?
Yes. So today is triple witch expiration, the simultaneous expiration of stock options, index options, and index futures. This is typically one of the heaviest volume days of the year. We've consistently made, kind of record volume closes here on the NYSE. I think one of the interesting things this time around is that we've seen, despite some of this geopolitical uncertainty, we've seen volatility really compress, right? And much of that may have to do with this options expiration and the way you have dealer community having to hedge some exposures. What you could see on the back end of that is, as we move into next week, we may start to see an expansion of that volatility as some of that hedging kind of rolls off.
All right, Michael Reinking, he's a senior market strategist here at the New York Stock Exchange. Michael, always good to get your take.
Thanks for having me. See you soon.
Thank you. See you soon.